Hey folks, Dan Frio here with your Mortgage Minute. Actually, it's not going to be the Mortgage Minute. I hope it's not going to be the Mortgage Minute because I have my buddy Nico with me and my buddy OG Rick Mahone. So hey Rick, how you doing out there, buddy? He's out in Arizona. He's a realtor, YouTube influencer, and he has his own show and he does a fantastic job. So where are you this month, Rick?
Good
You're
to
always
see
traveling,
you again.
buddy.
I scooted up about 3.5 hours northeast of Phoenix to the communities of Sholo and Pine Top, and the elevation is 6,800 feet. So when you go walking, you're going. And
I do that in Chicago.
Yeah,
just going up my steps.
Well, I'm soaking it up for all it is, but it's about 25 degrees cooler up here, but it's still warm now. In fact, I'm looking here and it says it's 107. That can't be right. But
Phoenix has dry heat though.
Yeah, so's my oven, but you don't see me sticking my head in there.
Seriously.
So we're running about 89 degrees up here, 90, and we get afternoon thunderstorms just about every day. And then they build up, and then they roll down and slam the city of Phoenix. So
good. Well, today's topic is, everybody knows from the headline. I hope we're on YouTube again because we had some technical difficulty on Tuesdays, and we noticed about 5 minutes into it that we weren't getting anything out there. So if you guys come on board, if you'd let me know where you are and where you're watching us from, just so you know, because we have some technical difficulties every once in a while. But today's show, I don't really want to talk about housing prices and the crash and how where interest rates are going to go and everything. Basically, what I'm looking to do is educate those. You're watching the channel, and the channel is First Time Homebuyers, a live stream. What the game plan is. So what I want to do is basically lay out a roadmap of, taking you from renting to homeownership, if that's what you're looking to do. Now, I'm not FOMOing real estate. That's your prerogative. But I just want to educate those out there that are saying, hey, you know what? I got a job over at this place, and it's a great job. I plan on being there for 5-10 years, my whole life. So what should I do? So basically the context today and why I had Nico here is he's a moderator. So he watches what your comments are and so forth. He participates. He's one of my number one loan officer. Rick Mahone's down in below, and I'm happy for him to join us. He's out in Phoenix, Arizona. I always have a realtor on here each week to give us the context of what the market looks like. Today, we're going to just throw a little curveball at this because I truly want to focus in on just mortgage programs and the things out there if you're looking to buy your first home or maybe even your second home. Some mortgage programs you might not know about, or unless you do this for a living, you might not even know the basis of a lot of these mortgage programs. So I'm going to throw this to Rick real quick and say, Rick, you deal with a lot of home buyers, okay? Yeah. And in today's market, I get with all the information out there that there's going to be this catastrophic, plunge in home values. Is that one of the things that common thing that you're seeing right now is halting a lot of, especially millennials on buying their first home? Is it an interest rate shock, or is it, they just anticipate a huge mortgage or a huge housing crash?
Yes and yes.
Hopefully there's more than that.
When you're talking about, getting your first home, I mean, you're inundated with advice from mom, dad, brothers, uncles, Uncle Bob, the amateur investor. And so you really don't know where to go. And a lot of that advice is really good, and some of it's outdated. And so by the time when I get with first-time home buyers, and you mentioned it earlier, the biggest thing is they don't really know where to start, and the realtor is like the last person they want to talk to, because they think we're going to make them buy something they don't want to. They're not comfortable with us. They've heard bad stories about agents, and they don't realize that they don't have to pay us anything. I was speaking with someone who had a lot of experience, and she owns a place and talking about selling a townhome, and even in listing the townhome, she goes, well, who pays for the pictures? I go, well, I do. And she didn't even know that. So it's not fear. It's just, when you're stepping into something new, you want to be comfortable. And and if you're not comfortable, you just kind of sit back and watch for a while. And, when you call a realtor, you don't even know what the first question is to ask.
I know. And that's basically the whole That's basically the whole gist of what I was going to, the program I want the program to be about today is you're thinking of buying a house. Now, Rick, on your side of the equation, let's say I'm a millennial and it's my first house. The tough thing here is you don't know what you don't know. And
Yeah.
that's where how do you ask questions? So hopefully you find on YouTube, like just recently or in the several months ago in the winter here, I didn't know how to, my snowblower broke. So I went on YouTube. And I can't even screw a light bulb in. So that's no joke. I went to YouTube. I took the whole thing apart, changed this thing, put it all back together, and I'm like, are you kidding me? This thing works. So that's why basically one of the reasons why I'm on the YouTube platform is just to educate you guys. I'm not going to say out there, I don't want to talk about the housing, but is it going to crash or whatever. I want to just advise you guys, what steps do you follow when you finally decide, okay, I want to buy a house? So I'm going to ask you, Rick, I'm the first time home buyer. The first thing I'm going to do is go to realtor.com or Zillow and something like that and start looking for my house, right?
That's what everybody does. Yeah, they try to find the house first.
What would you suggest?
Put it in reverse.
But
look, hey, and I'm not, telling everybody that's a bad thing to do, but it does kind of whet your appetite.
Yeah.
And then they think that the name that they see on there is someone that's listing the house, and so they call them and say, "I'd like to know more about that house." Well, they're usually just agents that are advertising on that platform. So what I would roll back first and say, if you're serious that now's the time that you're getting close to serious about looking for a house, talk with your friends and family and find out who the real estate agent was that they used and did they like them.
Great point.
And how'd the transaction go? I'd put that before any online stuff. Even here, you get on here and you see a real estate agent and you really like them and everything. You may feel like you know me because you've seen me online, but it doesn't beat having friends and family tell you, I worked with Rick and he did very well.
Recommendations. Yeah.
The recommendations are everything. But then be sure and ask him, well, what is it that you liked about him? Well, he always called me back. He really helped me with simple things. My dad was a realtor for years, and my best friends would tell me, I loved how your dad would talk to us in between showings, and he could do the math calculations in his head. And after the second house, he really knew what we were looking for, and he knew what payment and budget we had. That's probably the most important part. But before you even get in the car, I guess I would ask you, Dan, well, Dan, tell me what's making you at this point in your life decide that getting the home's the thing you want to do?
Yeah.
Well, I got a new job. How long do you think you'll be here, Dan? Because if you're going to buy a house and only stay 2 years, don't do it.
Right. I preach the same thing. So
Yeah.
So what we're trying to explain to you guys is you got to find a solid realtor that you can know and trust, because there's a lot out there that they need a transaction. They're just trying to get a paycheck. I get it. Here's my approach to a lot of times. I'm just trying to hit the masses. And if somebody has a better way for me to do this, I am all ears. But it was kind of an eye opener when my oldest son, he's 30 now, a couple of years ago, he went to buy his first property. And I said to him, if it wasn't for me in your life, what would you have done? And he said, I would just Google it and then go from there. And that, as soon as I heard that, kind of the hair on the back of my neck stood up. And I'm like, okay, well, you're going to get one of those top companies. You're going to call in and you're probably going to talk to somebody that might not have a clue and so forth. So I just did a video out recently and I did a lot of research on it. It was still amazing to me how most people still think they need, maybe 20 or 10 or 20% of a down payment. So the first thing I want to start out is, during this process, you finally decided and you're watching this video, you want to buy a house, or you at least want to kick the tires. So the first thing we want to do is make sure, for example, if I would love a Ferrari. Can't afford a Ferrari, but I'm not going to go to the Ferrari dealerships and start kicking the tires if I can't afford it. So unless you have the cash to purchase a property, just make sure your financing are in line. A lot of your clients that you get, Rick, do they use local banks? Where are they finding their lenders out there? And I'm just, again, let's assume that I'm not a mortgage guy.
Everybody all starts. You know what? I went to one of the big online companies, and they told me I could qualify for blah, blah, blah. I went to a credit union. They don't even know that mortgage brokers like you exist. They really don't. They get online and they click and they look for, they want to operate behind a curtain. So in other words, I don't want to get to know that guy that's going to tell me I qualify or don't qualify. I just want to click on a few things and get the number. Oh, Rick, you qualify for 400,000. Great. Whew, good. I didn't have to talk to anybody. Right. I see that all the time. Now, when I get that, I say, well, here's what I suggest. First of all, a lot of those online companies, they didn't dig and get enough information from you. They got just a couple of things, and then they spit out an interest rate. So I say, don't get on the phone and call 6 people and ask the question, what is your rate? And then expect an answer right then, because they're the only ones that are going to tell you that is online, because they're going to adjust their fees later. They'll tell you 5.25. And then you're going to go to close and go, yeah, it's $7,200 in fees. Yeah. Oh yeah. Well, we had to pull your rate down to that 5.2 that we quoted you. So I said, get with mortgage brokers and say, here's my income. And I said, they're going to ask for things. They're going to want to know what your income and what your debt is. And, so they can figure and what your credit score is. And then they're going to find you a variety of products to fit what you're looking for. And they can't do that in 5 minutes. I've had lender friends of mine say, there's nothing worse. And you guys have said the same thing. People call and go, what's your rate? Well, I need some information for, you can't give me the rate, then fine.
Click.
And there's no
I always, I say the same thing. I'm like, if somebody gave you a quote on your initial call, hang up. Because they're just telling you what you want to hear at that point. So basically what we're trying to explain, guys, is do Google search, do whatever you want. What I'm making on this platform, I just launched a video and it just hit about an hour ago, and I was showing what we do and how we do our services. So what I ask you to do is, if you're watching this video, share it with people, share it with your realtor. If you're working with a realtor, share it with your family and friends. At least we can give you some context. So let me walk you through this process. Let's say, for example, you want to buy your first house. Okay. The first thing that you have to do is call some lender. Okay. I love being a broker. I worked at 2 different institutions that were not, and I didn't last there long, because I feel like I have a fiduciary responsibility to my clients. I don't want you to be able to go, now I won't have the best rates ever. If you called 5,000 places, there's probably going to be somebody that beats me. But what we do is as a broker, we deal with about 100 different lenders. So on my side of the equation, I have not only their rates, I have their programs available to you guys. Some people might not even know a term, what's called overlays. So I'm going to explain to you what an overlay is. So for example, let's say an overlay is this. FHA truly does not have I'll rephrase that. FHA has a minimum credit score of 500. Okay. But you're going to say, Dan, well, I called 5 different places and I told them I have a 610 credit score and they all turned me down. That's an overlay. Okay. What an overlay is FHA has a certain program to get the 3.5% down. Yes, you need a 580 credit score. That's etched in stone with FHA. But there's a lot of lenders that are not doing a 580 credit score. I would challenge you guys out there, if you have a 560 credit score, call 100 different places, and I can almost assure you might find one that'll say they can't help you. So that's what we call an overlay. So as a broker, I deal with over 100 different lenders to make sure when I give you a quote that it's accurate. Plus, I have the availability of all these companies to help you guys find that product. We're contracted with all these banks that they pay us basically a referral fee. So how we make money is this. Let's say, for example, you go to Wells Fargo. Okay, at Wells Fargo, you're going to deal with a loan officer there, and they're going to do hopefully a great job for you. But that loan officer gets a salary. They get commissions on their sale to you. They get benefits. They have a pension plan. They have a 401k. They have insurances and everything. So if they get a deal from me, basically we package up the whole deal and send it to that bank. We eliminated probably 80% of their staff. So that's how they can afford to pay us a fee to do this. So that's what they do. And that's why I prefer to be a broker, because it gives me the options of programs all over the country. It also, if you check out my video that I just posted a little bit ago, you can see where mortgage rates vary all over the place. I did a scenario on an FHA loan, And the rates went all the way from 5.125 all the way down to 6.75, depending on what lender you chose. So the biggest piece of this puzzle is to make sure that you qualify for the mortgage program. And a lot of times, like Rick, there's probably times where you get a pre-approval from a specific company or two. You probably cringe because it's one of those online systems that everybody just plugs in their data. And you guys got to remember, junk in, junk out. And they get this pre-approval in their hand. But if you put in, for example, in the application, let's say you think you make 50 grand a year, or you kind of make 50 grand a year, but you put in 50 grand, but your pay stubs are only representing maybe 48,000. That's a big variance. Okay. You might not think of it, but if you put in that data wrong, you might get pre-approved for that loan, but you're really not going to get approved.
Oh,
So
I got a good one for you from a few years ago.
There's horror
guy,
stories every day that we get.
Yeah, this one is just wicked. A lot of these big companies, online ones, they send out leads to real estate agents.
Yep.
In other words, they say, and it's power dial. So if you pick up the phone first, you get the lead, and if you don't answer,
I think I know who you're talking about.
Rolls to the next agent, right? So
yeah.
So they pre-qualified this guy, and so I talked to him, and he said he pre-qualified with this company. And I said, okay, that's great. Now, tell me what's your price range. What did they pre-qualify you for? So did you give them, proof of funds or what's your income? Just your basic questions. And right away, he goes, I don't believe in banks. I'm just going to tell you that up front. I said, oh, okay. Well, you're going to be dealing with some in this transaction, but so how do you work things? He goes, well, I get my check, I cash it, and he goes, and I just take out enough I need for bills, and the rest I just stuff under my bed. And I said, okay, that's great. And we kind of ended the call a little bit right there because he had a whole bunch of other criteria. And I called this main company and I said, did you fly to his house and count the money under his mattress? Did he actually take pictures of the dollar bills?
Yeah.
I said, how can you pre-qualify this guy when he doesn't have any bank accounts and all he has is money under his mattress? Oh, well, I go, how? They couldn't answer. And I said, please pass this lead to somebody else.
Yeah. Well, they probably didn't do anything with it. It's purely automated. So that's why I tell a lot of people, we talk to every person on the phone. So what we do at that point, so if you're interested in a mortgage, guys, what I ask you to do is it's simple. We have you apply online. The reason why we have you apply online, you pass all the compliance things that we need you to pass. You're going to consent to us being able to call you, email you, pull your credit, and everything else. Then you're going to get a phone call. You're probably going to get a phone call within 5 minutes of you finishing that application, because we want to make sure, we want to validate all your information. For example, if I ask again, this is the most common question, the most common, I'll say, mistake that a lot of people make. They put in their income. It didn't ask you, what is your income? Well, a lot of people might not understand the gross versus the net. Okay. Or they might just round it. This isn't the transaction where you guess or you round numbers or anything like that. It's got to be specific, because look at it. You might be getting $250,000. Okay. We're not on a whim. You're going to get that money. So the biggest piece of the puzzle that I'm pleading to people with is on the mortgage side. If you cannot get a mortgage, there's no use even looking at homes. So now you decide you want a mortgage. How do you find the people? Like I said, hopefully you find me online. So let's assume that that's what takes place. So now you want to know what kind of product, what do you qualify for? How much money do you need down? Let's start answering some of those questions along this. And then we're going to open this wide up to all the questions that you guys have, because that's the whole context here. It's not to listen to me talk, to Nico and Rick talk. We're here. I get a panel of people, and that's why I ask realtors on here every week. So you can ask real estate questions. You can ask financing questions. You can ask any questions that you want. And that's why we do this. So the biggest piece of this puzzle is the qualification piece. You got to make sure you're with a reputable company, with somebody that knows what they're doing, because otherwise you're driving down a speedway at 100 miles an hour, going to hit a brick wall. And we get calls every month end from people that said, I was pre-approved to get a house. Now I'm supposed to close next week. And I all of a sudden find out that I was turned down. And then when you always find out the reason for the turn down, it's like They should have caught that, back a month ago when they gave you the pre-approval. But again, a lot of this is automated. A lot of it also is newbies that are just, they hired somebody in. That's basically their front line. They're phone people just to kind of answer questions the best they can, just to make sure you put the data entry in. So let me just go through real quick some broad programs that most first-time homebuyers qualify for, and then we're going to open up the floodgates. So there's let's go through 4 programs really fast, and I'm going to basically just explain to you guys how much money you need down. For sure, for real. Okay, there's very little no money down stuff. There's a bunch of ads with no money down, and you could do this and whatever.
Yeah.
There's basically 2 programs out there. You can do USDA, which is, it doesn't have to be a farm. You just have to be dedicated in a USDA ranged area, and VA. Those are the 2 areas you do not need any money down. Also, VA loans, just to let you guys know, if you're a veteran out there and you own a house, you're happening to watching this, you can refinance your house now, again, up to 100% financing. So if you have a ton of bills that just bearing you, those 18% credit cards and so forth, you can get a mortgage there and try to relieve yourself of that. So those are the 2 big programs that require nothing down. Really, there's nothing down. The next piece of the puzzle is you can get a conventional loan with 3% down. That's the nuance that most people don't know. And then one caveat behind that I just want to explain to everybody is you do not need to be a first-time home buyer. There's so many tutorials or YouTube videos that I watch, and they go through the guidelines, and I hate to say it, it's like, you're wrong. You're wrong on the debt ratio. You're wrong on that. And I don't try to critique them, but that's why I started YouTube, is basically to debunk a lot of this stuff. Okay. So when you can apply for a conventional loan, most of the programs do not allow you to own another property at the time that you close on this loan. So if you're looking to buy a house and you want to put 3% down, you can't have another home or mortgage on your credit at the day of closing. Cannot even be an investment property because you can't qualify. Otherwise, you would need 5% down. So then that carries us over to FHA. FHA is usually the end-all, be-all. They can go down to credit scores at 580 with 3.5% down. Yes, they can go all the way down to a 500 credit score, but you need 10% down. Okay, so that's that. Debt ratios. This is where I see everybody getting this wrong. FHA truly, and I do it every day, will go up to, and I don't agree with it, but a 57 debt ratio. I just watched a video this morning, and the guy says they'll max out at 43 and they might go a little bit higher. Dude, you can't be doing mortgages. Either you're a CPA or you're a whatever, or you're just trying to get clickbaits, but that's not true. Okay, so they will go up to 57%. VA, I've seen VA getting approved up to 60. Guys, don't shoot the messenger. I'm just explaining to you guys the products and the pieces of this puzzle to get you into home ownership. There are a lot of down payment assistance programs. Sorry, Rick and Nico, I know I'm taking the brunt of it right now, but I'm going to open this wide up. There's a lot of down payment assistance programs. Before you do that, please analyze the whole thing. Okay, I know you're excited to get into a house. You might not have any money, and you're like, "Hey, I'm almost ready to sell my soul to get into a property." Please do your due diligence. There are programs that are out there that are really beneficial. There's 1 or 2 particular programs that we offer that there's nothing. You walk away from the closing, and it's basically free money. Okay, most of them they're either a lien on your property, their payments. You're selling your soul to some of these companies, and the rate sometimes is an extra 1% higher than normal. Okay, so please be very careful when you're looking into down payment assistance, because most of them are, I won't say a farce. They're there, but they're not very good. I would never recommend it. I wouldn't even have my children get into that. So basically, that's the backdrop of the programs. So we're going to leave that wide open for you. Rick, anything to add to that before we start taking questions?
No, I think the key is, first of all, how do you find a mortgage broker? And I think one of the things that, we always want you to go to a lender before come to real estate for shopping, but you can also come to the real estate agent and say, do you know any good lenders? Because we work with lenders that we know and trust.
Right.
And sometimes the online ones don't give us the attention. Now I had a good friend, they were working with this huge company, not the one you probably think, but
yeah,
they said the guy went dark. They said, we're supposed to close in 6 days. And he doesn't answer phone calls, emails, or anything. And I said,
He might have got
well,
let go.
Because he knows after he closes your deal that he's probably never going to do business with you again. But whereas you, if you do business with me, you want me to refer you more business in the future.
Yeah.
Right. So most of those guys behind the cubicle, if they're just dealing with you directly without an intermediary like an agent, they're looking forward to flicking you off the desk because they're not going to see you for another 8 years, and by then they're hoping they're going to be somewhere else. Or like Dan just said, they probably got fired and nobody picked up the file.
Right.
But
And they might have been a fantastic loan officer. Maybe they got fired because it's just a downturn in the market. If you guys are watching me on this YouTube, you probably see all the other videos that, kind of precede mine and so forth. And it's, people either preaching Armageddon or everything's, peachy. Right now I'm saying it's a gloomy market. There's no refinances. Nobody's refinancing. And Rick had some good comments right before this. There's a lot of people. Tell them the people that are putting their houses on the market now versus where there were, and then after that we'll go answer any questions.
There's always a devil in the details, right? Little facts behind the numbers, and so you get listings are up 153%, listings are up 200%, and I track it on a 7-day moving average, and I'm looking to go, well, the first thing I have to understand, listings are climbing up so fast because sales have plummeted. So they're not buying them at 4,000 contracts a week. Now they're buying them at 2,500. So in and of itself, you've got a natural buildup of listings. But then I went in and I looked and I said, wait, we've got 2,000 out of 16,770 homes. 2,000 of those are new construction where they didn't have to put their homes on the multiple listing service. So now they do. So that's new.
Oh yeah. Didn't think of that.
Well, I get what he means.
You there? Did he freeze?
Yeah,
Rick,
he's frozen on my
side.
side.
I think Rick froze. We'll wait for him to come back, and he'll continue that. But let's get Nico. If you guys don't mind, we're going to open up the floodgates until Rick his internet service comes back on. So let's start answering any questions, and when Rick comes on, we'll have him finish his conversation. But guys, again, this is the first time homebuyer live session. I'm enthused. I'm excited to answer all your questions out there. This video is going to go on YouTube. It's going to be on there for a long time. Please refer it to your friends and family, whoever you can think of that might get some assistance from this. Because a lot of times, unfortunately, like Rick was saying, a lot of times you'll go to use your realtor and they'll refer you to a company. That's fantastic. But sometimes that company might not, because they know they don't have any competition, they might not give you the best deal in the world. So that's what, please, my goal again is my tagline. My goal here is to educate and inform you guys everything real estate, especially when it comes to the financing piece of this puzzle. So I think we got Rick back. Dude, you look like you were looking up at the star. I didn't know if you had a stroke or what was going on over there.
Yeah, all of a sudden lost my connection.
But if you don't mind, we're going to start at the top and start answering some questions. So Nico, if you could pop up those questions, I would greatly appreciate it.
Yes,
we have a new person on board.
Yeah, Sonia, I just want to say hi to Sonia.
Sonia, I know your scenario back. Actually, Nico brought it to me earlier this afternoon. We are trying diligently to figure out a solution for you. This might be a scenario where I have to call you tomorrow and get more details in the pudding to kind of figure out how we can possibly put something together for you. But thank you so much for joining us tonight. And thanks for reaching out. Just because people join us and watch us don't really know that, they not necessarily use our services. But if you are watching, please, all I ask you to do is just give us a shot. That's it. And if you're on here to help the algorithms, if you guys can give us a thumbs up, that's all I ask. Okay, so let's get to it.
All right, Scott just coming from Albuquerque, so we want to shout him out real quick.
Hey there.
Also, Robert, he likes our content.
You betcha, Robert. Thanks for joining us, bud.
All right, so cool. I purchased my first house. This is from Daryl. I purchased my first house in June. I was able to get $2,500 in closing. I had an inspection done and got a home appraisal. Not sure if that's a question, boys.
Yeah, I'm not sure what the question is. So, Daryl, if you can kind of finish that thing, or if you were just leaving a comment. So, if you guys would, to help us on our side, just put a Q in front of your question. If it's a question, if it's not a question, you don't have to put the Q, and then we'll just know it's a comment.
Here we go, Dan. This one's going to be from you, from Ariel. When the Fed raises another 100 basis points, how much should a home price reduce?
There's no correlation.
No
Well,
math
let
behind
me
that.
put it this way. There shouldn't be any direct correlation, but Rick might be a good input on this one because he's on the front line of the sales piece of it. We have to look at it. Rates went up, and I'll address this head on. But Rick, what's your comment on that? And then I'll piggyback right behind you.
Well, the market price is the market price. So the home is worth what buyers are willing to give you for it, regardless of where the interest rates are, because they're buying the payment. They're not buying the house. A lot of times, as you saw the last time, the Fed came in and said we're going up 75 points. Interest rates actually went down. Yeah. And so right now you're seeing the talk of them going up 100 points, and yet rates are still coming down a little bit. They're not going up, but there hasn't been any direct correlation that says, watch out, if we get 100 basis points, then that means the house will go down $40,000. It all depends on the price range and the buyers that are out there. So the most interest rate sensitive buyers are the first time home buyers and the move up buyers. Just had a baby, want to sell this little house, get a bigger one. So for us, between 400,000 and 600,000, that price range got hit the hardest when that rate spiked up.
Dude, I love having you on here because you know what you're talking
around
about.
that I want to share later too, that I think will help buyers a ton.
Got it. Say it. Is it a good time to put it now in context?
Yeah. So here's what I hear all the time. I'm waiting. What are you waiting for? I'm waiting for prices to drop. Well, how far do you want them to drop? I'm not going to pay what they are right now. Well, how far down do you want them to get? I think it's going to crash. Well, what's it going to crash to? Well, 30%. Okay, so you think a $500,000 house will be worth $350,000? Yeah. Okay, well then you'll just have to wait. I can't help that person.
Yeah. And
people. So I had a guy call me this week, and he said, my home was on the market for 8 days. I've only had one person look at it. I go, well, that used to be the norm. He said, I'm thinking of dropping the price by 40,000. What do you think? And I said, well, you have to take that up with your agent because I don't know your house at all, and I don't know the neighborhood of the market. But I said, here's a key thing that some people are barely dipping their toes into. What if you only drop the price 20,000, but you offer $15,000 in closing cost credit to pay for the buyer's interest rate buy down? In other words, instead of them coming in at 5.5, they might get a rate of 4.7 or lower, 4.5. Now you've solved their problem, which is the payment, right?
Yep.
And you paid it as a seller. The buyer didn't have to pay it. It's a win-win. Or if the buyer's sitting around saying, I'm going to wait for that guy to reduce the price by 45,000, he's only saving what? 48 bucks, 85 bucks? What? But if he gets a buy down, he's saving 250.
Yeah. Yeah. I'm coming out with the
buy down.
We just got a program, brand new program out. It's only a couple lenders have it. It's a rate buy down, and it's a pretty cool feature where you can, you take the going rate today, let's say the going rate's 5.25, you could buy it down, and that's exactly right in the wheelhouse with what you were just saying. Having the seller, in the scenario I ran, it was about $7,500. So you can actually have the seller contribute $7,500 back. So let's say, okay, pay market price, but give me a $7,500 credit to buy my rate down. So what'll happen is if rates are 5.25 now, you'll start out at 3.25, and then it'll gradually move up. But that's another option. There's a lot of creative financing coming into play as we speak with a lot of this stuff. But I'll address this real quick. The Fed. Here's my take on what the Fed's going to do. I don't think they're going to come in with 100 basis points. I think they're going to come in with 75 basis points, because if you watch my videos and you're watching a lot of the data that's coming out right now, the jobs numbers are looking bleak. Manufacturing starting to look bleak. To be honest with you, too, mortgage rates are down 0.5% from where the high hit, and that high wasn't long ago. So if you've locked in with a bank for say, about 2-3 weeks ago, and you're still off, you don't have a closing for at least 30 to 45 days, let me know, because rates are about 0.5% off of the highs on where they were, and it wasn't that long ago. But putting this into context, Rick hit it right on the button. Here's my game plan that I think that's going to happen next week when the Fed does meet, and I was dead nuts on this last meeting. is I think they're going to come back with 75 basis points. And the markets are going to go, whew. But the biggest thing what we watch, and I'm going to have a live event for this, is we want to see the forward guidance that they're saying. Because I think 100 basis points right now, so you'll have some analysts out there saying, they could do 200-300 basis points. It's not going to help. Well, it's going to surely crash the markets. And we saw that last time. Okay, so I think the projection is right now they're going to stay at 75 basis points. And then they're going to come out and say, okay, here's what we're going to do at the next meeting. They're either going to announce another 75 basis point hit or a 50 basis point hit. Once they announce that, the markets are going to be relieved once again. And you're going to see a lot of the markets stabilizing. You see the stock market right now rallying for the last 2, 3, 4 days because of the economic calendar that's coming out. And the thinking behind a lot of this is the Federal Reserve's the markets are doing what the Federal Reserve is wanting to happen, but the market's doing it for it. So it's gradually starting to pull everything back down. The stock market's seeing that, the bond market's seeing that. You see stocks up and mortgage rates coming down. So I'm still not a proponent until we really have the supply demand charts way out of whack. That's one of the reasons why I have Rick on here to talk about, housing supplies and all that stuff. And we'll get to that here shortly. But we want to see, when I start seeing there's way more supply than demand, that's when you're going to start seeing prices come down. But we still don't have those numbers. And again, you got to put a lot of this information in the context, because if somebody uses data from last year, it's a bad data. Let's say, for example, if you were furloughed for a year because of COVID, now you're back to work. Well, I can say, well, your gas, which you've been using in gas, is up 500% than what you used last year. Well, yeah, because I wasn't working. That's. I hope you guys understand where my context is there. But okay, so cool. Hopefully we answered your question. I think houses are going to, my opinion is houses are going to start to stagnate because the supply is going up. Demand's kind of staying there or dipping down. So instead of having 40, 50 bids on houses, like Rick just said, you're going to get back to the ones, the twos, the threes. So unless you really have to sell fast, well, you should have put your house on the market previously, but let it sit a little bit. Just because it doesn't sell in 4 days, relax. Okay, you don't have to drastically go in and drop that price $40,000. But again, what we're talking about today is for those first-time home buyers. Maybe you sit on the sidelines a little bit, or maybe you put in a bid on that property, and maybe you come in $5,000 less, or you go in and you put a bid at asking price, asking for $5,000 or $10,000 in seller credits. So here's what we mean by the seller credits. Rick, you want to explain it for me?
Well, yeah, I think if I was a buyer right now, I'm sitting here and I saw the June numbers and sales were way down, and July is going to be way down, and August is going to be way down. So now you got to look at a house and you go, well, the sellers are now willing to give you things where before they weren't. So when you wait, you have an interest rate risk. The rates may go up, right? But if rates go up, sales go down even further, so do the odds that a seller might say, here, let me help buy down your rate, my friend. And so you have an interest rate risk, but maybe you don't if you play it right. So I know people are fixated on price. Nobody wants to give them their asking price. And look, sellers can't, if they don't get their asking price right, then it's not going to appraise. So they can't say it's $550 if it's really worth $525. But if they get down to $525, don't feel like you shouldn't offer them $525 if you're going to ask them for $10,000 to $15,000 in closing cost credit to buy down your interest rate.
What you're probably seeing now, and what I think's happening is we're starting to have FOMO on the seller side. They're like, yes. Well, I could have got $1 million for my house, 6 months ago. Oh boy, I would still like to get $1 million. So I'm going to put this house on the market. I don't even have a game. I had 2 neighbors that just sold their houses, didn't even really have a game plan. They're like, shit, my house sold for a lot more than I thought it was going to be. So now what? So You're starting to see a lot of FOMO on the side of sellers. So be aware of that. That's one of the areas too where your realtor is really going to help you. They'll be able to really dig in and say, okay, that value that they're asking for, I think we got a lot of wiggle room there. So again, for those first-time home buyers, what I would do is I might ask for, give them the price that they want or they're asking for that property. But the low ball, I won't say a low ball, the quote that you were going to give them. So let's say you're looking at a $350,000 house and you're like, I'd really like to get it for 340. Well, go in and offer 350 and have them give you $10,000 back. What that's going to do is this. So for example, when I talk about down payments, so let's say, for example, you're qualifying for that first time home buyer program with conventional financing. You only need 3% down. Okay. So you're like, okay, let's make this simple. I'm buying a $100,000 property. So you need 3%, which is $3,000. Okay. I got $1,000. Cool. I can buy a house. There's a lot more to that equation because you're going to have to get a mortgage. There's going to be recording deeds. There's going to be filing fees. There's going to be credit reports, appraisals, inspections, title reports, a cost for the loan. And you're probably looking at about $4,000 to $5,000 or $6,000 at least in addition to that down payment. So that's what I'm getting at. You might have the down payment, but you might not have the down payment plus all the stuff that accompanies it. So that's where a lot of people too get shocked. Like we have a closing going on tomorrow, and the gentleman that I spoke with him last night, and he's like, this is about $2,000 more than I thought, and it was basically a tax credit issue that wasn't posted yet. But he was kind of, it's like, I have it, thank goodness, but what if I didn't have it? So there's a lot more to that equation than just the down payment piece of that puzzle. You ever run into that, Rick, where it's like, they thought they had the money, and then all of a sudden it's like, I didn't realize all those additional costs. And there are.
I ran into one where they clearly had the money because they sold their house for $1 million, and he's still mad over a $400 fee that was in there, and just and it was an escrow holdback fee, and it was people don't like surprises, and it wasn't really a surprise, but people don't like surprises. The one surprise that I've seen in this market though is make sure that your real estate agent is on top of what's really happening in the market and not just the headlines, because right now they're telling you more and more listings are coming on board, and the prices are still going up. Not really. So we have more sales have dropped, more listings are coming on, but the prices that they say that are still increasing, those contracts were written on the 1st of May. They closed in June. So that's bad math. That's bad reporting. So make sure that your agent can explain to you what's really going on. The bright thing that we've seen, which I think is happening faster than I thought, was the listing price. We called it wish pricing. I wish I could get this price.
Yeah.
They're finally putting them down at 2021 levels. They're not pricing at mid 2022 anymore. The average list price of Phoenix is down to last year, which the year before that was still a good equity gain. So we've got equity, but you won't see that in the headlines.
Yeah, and some of the markets they were astronomically out of whack. And when I come back, I kind of do it the opposite way. You have people brushing everything with a broad stroke, saying the world's going to end. I'm not a proponent of that. There are areas in the country that I think are going to come down. I don't think they're going to come down 50%, which I consider a crash. They might come down, 10, 20%, but it's basically back to where you were last year. I don't consider that a crash. That's just my math.
But they always do. They always, real estate always goes up, always comes down.
You made a comment right before we came on. What was your comment about real estate prices versus rent?
Real estate always goes up, always goes down. Got those 10, 15, 20% swings and everything. But gee, how come rent doesn't? It always goes up.
Yeah, and a lot of people are getting crushed right now. What was Nico? How many buddies now that you have at this point have come back and said, we got our leases or our lease agreement or proposals for next year, and are they going down?
Well, so no, I got a lot of most of my buddies I got into a home, so it's mostly neighbors I live around in the city. They're like, my rent just went up $500, $600, so it's wild.
Yeah, it's so rent's always going up. Okay, so hopefully, Ariel, hopefully we answered that question for you. And I apologize. I need to start putting a timer up here so we can go through each question and just kind of fly through these for you guys. So, okay, cool. We can move on.
All right, from Bob. In contract to close sometimes next month on a new construction, 30-year FHA home in Florida for $350,000. It appraised last week at 85% completion for $372,000. That's good for us.
Absolutely.
Yeah. Let me give you an idea of what I would do. Okay. So I'm not quite sure why you're going FHA, but I would love to talk to you on this. And here's why is if we could possibly get you in with a conventional loan just to close. Okay. So bear with me on this one. You're buying it for $350. We'll go in and get you done on possibly a conventional loan. Okay. What happens right after that, you can refinance a conventional loan at any time after you close, and it would be based on the new appraised value of your home. Okay. So in your case, you're buying this at an 85% LTV at $350. You close. You could basically go, I would say go 2, 3, 4 weeks, wait for the deed to get recorded and everything else. And then what we would do is refinance you back into another conventional loan with no PMI, because now you would be under 80% loan to value, and you would basically eliminate your PMI, which in your case is probably going to be about $280, $300 a month. So we could save you within probably 60 days about $300 a month. That's the way I would structure that deal. Why I would not go with an FHA loan is this. FHA charges you 1.75% of they call it an upfront mortgage insurance fee. So they're going to charge you 1.75% of the loan amount. So in your case, that's a lot of money. Okay, that's probably $5,000-$6,000. You don't get that back. Okay, you won't get that back. So basically, you're throwing away about $7,000. Now, your mortgage advisor should have, said that to you once they got the appraisal in. But again, a lot of them don't. I won't say they don't care, but they're transaction driven. They just want to get to the next one and the next one and the next one. They might make $200 on every loan they do at a lot of these places, and that's what they make. Where we want to be your advisor. I don't want to be a loan officer. I want to be able to advise you to say, okay, here's what I would do and why. And that's exactly what I would do in your scenario. So if you'd like to talk with us or get any assistance, down below in the description, or Nico will pop that up here in a little bit. You can find out how to get a hold of me or Nico and at least answer all the questions that you have. But thanks for joining us today, and thank you so much for the comment. Rick, was I on point there, or would you suggest something different?
Yeah, it's FHA on new construction. It seems kind of unusual that the builder has a lender that's pushing FHA, but I don't know the whole circumstances like you do.
Right. There might be a reason why you're going FHA. So, if there's no other options for you, God bless you, take what you got. But I'm just saying, a lot of times is the lenders will push you more into an FHA loan because there's more. I'll be transparent. A lot of us make more money if we go with an FHA loan than if we do a conventional loan. It's just how it is. So many people do fit conventional financing, but end up having to go FHA because that's the way their loan officer pushes them. So that's just between us here on the YouTube channel. All righty, next one.
All right, cool. Robert, we're under contract for a home right now, which is closing in mid-August. I have two options in loans: 30-year conventional rate, 6.335, or 3.89 5-year ARM, 30-year conventional.
Robert, that's going to be another one I would highly suggest. I have no clue why you're at 6.35. And check out my video that I just posted about an hour ago. I go through our pricing engine, and that's exactly kind of what I'm saying is we scan what we do. We're a mortgage broker. So I take all your data and I put it into a system, and then it scans basically the whole country for us to find out what lender out there that we can deal with has the best rates, best fee structure, and best program that would fit your needs. I don't know, Nico, have you quoted a 6.35 rate other than a non-QM yet? I haven't.
If it's bad credit, I'm not going to lie to everyone, but yes.
Okay. So, I don't know how big a loan. You might have a jumbo loan. I don't know you say it's a conventional loan. So, I don't know why the rate's so high. Unless your credit is just, not that great. No disrespect. I'm just telling you what I think. Or you're
let me flip the script a little bit, I guess. Yep. Would you take that 3.89 ARM, 5-year ARM versus
with that spread all day long? Because you're years away. So it's a 5-year ARM. So you're going to have 3.89 for 5 years. Then there's going to be caps on that adjustment. So your cap is probably maybe a 1% per year cap. So you're probably 7, 8, 9 years out at worst case scenario until your rate hits the 6.35 and where they would put you on the 30-year fix. Right. So in that case, with that spread, all day long, I'd be taking that. But again, Rick, you mentioned this point just before. They put in the application, they put in, we give you a 5.25 rate. Then right before closing, they back in the numbers to see how much they're going to charge you for that rate. So I'll throw that back out. That 3.89 rate, how much in fees is it costing you? That's a fantastic rate. But if you come back and say it's going to cost me $15,000 in fees, I'd be like, I wouldn't do that either. So there's more to all these equations. I love these comments. I love them. But this is exactly the format that we want from you guys. So you can get it from me, you can get it from a realtor, and you can get it from a millennial over here. That's why we're all on here. We're different age groups, with different dynamics, different industries. It's to provide you guys the information. So, Robert, I would highly suggest give us a call. It's not a strong sell. We're not going to beat you upside the head that you got to go with us and make this decision. We're just here to educate you. If we can provide you better services at better rates, then you choose. But if you come back and say, give us the criteria, and those are basically what we would offer you as well, I'd be like, just stay with them because you're already through that process. But I would love to talk to you because those numbers are way off.
Sure.
Yeah, they seem high.
Thank you.
Yes.
All right. From Brandon, question: can you get into a first-time homebuyer program if one spouse is a first-time buyer and the other is not, Dan?
Okay, it's Brandon. The first thing I'll ask is, does the other person, again, first-time homebuyer in most of the programs means, it used to be a first-time homebuyer where you could not own a house, period. And then they had it where you could not own a house in the last 3 years. Now, what would happen is I won't get into the nitty-gritty, but there is a program out. Most programs right now require that you just cannot own another property at the time that you close on the new property that you're looking at. So in this case, if either of you own another house and the mortgage is showing up on the credit report, you can't do it. But what I would ask is, can you qualify on your own? So what happens, here's what's happened sometimes, is we have Mr. and Mrs. apply, or however you want to deem that. And then say that the other party isn't working, but you want them on, to be a part of the transaction. You want them to be on the home and all this other stuff. They don't have to be on the mortgage. Okay. They don't have to be on the mortgage. So let's say you have one partner that isn't working and has, $10,000 in student loan debt. So what I would suggest is let's not use them. Let's not use them because all they're adding to the equation is debt. So in your case, if the spouse, owns another property, but they're not working, we won't use them in this case. But all this also depends on what state you're in, because some states do require, both people's information's provided and whatever. But most states do not require that, both parties have to be on that loan. You would still be on the deed to the property. You would own it and everything else. You're just not obligated on the loan. Rick, am I missing something on that you can think of, or Nico?
No, I don't think, there's no such thing as you have to be a first-time home buyer now.
Yeah.
Yeah, no, the only thing I can tell you right now, if you're looking for a grant first-time home buyer program, they're not there right now.
Okay.
That.
Cool. But great, Brandon, great question. And again, this is the whole format behind here. I love the questions. So nothing's dumb. Please ask. That's why we're doing this.
Cool. Ariel, again, if interest rates go up, it prices out buyers. So sellers need to lower the prices if they want to sell, right?
Yeah. Rick just hit that one on the button. Go to the seller and ask them, and maybe if they'll give you $10,000 in seller credits back, and then you can buy down the rate, and that helps everybody. The seller got rid of their house. Yeah, maybe they took a little haircut. Maybe they lost. They didn't get $10,000 extra that they wanted, but they still got probably more than they expected, especially from 6 months ago or a year. And you get into a loan that qualifies, and it puts you in a payment realm that you're looking at. Now, I'm not a proponent. I wouldn't, thank God there's not those teaser rates and option arms and all the junk subprime programs that were back, years ago. Those are all gone, but there's still ways to do loans to help all parties. But guys, I get it. Prices of houses have skyrocketed. Taxes are going up, rates are going up, and wages aren't following suit. So I'm not trying to paint a perfectly pretty picture here, but the whole goal here is, if you still are at this point looking to buy a house, we would love to at least assist you or answer the questions that you got.
Well, and the sales prices, the actual closed sales prices are not coming down yet because those contracts, again, were written before the interest rates went up. You will see next month the closed sales are down, but they're going to be up for the year. So you're going to want to see what the closed sales were on June compared to May, and then July compared to June. But again, make sure your agent knows what's really going on. For example, in Arizona right now, the asking price has been steadily climbing at a really fast rate. At first, they were putting them on, and we would have 1,200 price reductions over a 7-day period. Now we have 5,000 price reductions. So the sellers are catching on quicker than a lot of people think. So they're putting them out there. And a lot of this is not driven by the price. The asking price, I don't think, is driven by your next door neighbor that's asking it. It's the flippers that got to get out.
No. Oh, I didn't think of that.
It's the open door, the offer pads. We have these iBuyers out here, and the guy that remodeled the house with hard money, he's got to get out. Those are the three components that are just saying, I got to get off underneath this. The rest of the people are going, I'll leave it on, see what happens.
Yeah. And that's, that's what I always advise people to do. I do the same thing when I'm looking for a car. I don't wait until my engine's, broke and I have 4 flat tires to now go and I have to buy a car. I'm like, hey, and if you guys ever saw my car, you'd understand. You sure you don't do that? Because I run my cars into the ground. But
I was just about to ask you that, Dan. I'm like, are you sure? Who are you talking about here?
My car was, I won't even get into it. I just donated one of my cars to Pastor Ross. He's a pastor friend of mine down in the city. I gave a minivan to his church to help out a family. So, but okay, next one. But thank you so much for the question.
We got Brandon again. Why is a conventional loan pushed more than an FHA loan when the FHA loan has a better rate?
I'll go ahead and answer that. The FHA charges you fees. Okay, so let's say I'm going to break this down. FHA, if you get an FHA loan, no matter what, you're going to pay 1.75 points to HUD, basically, of the loan amount. So that's 1.75% of the loan amount that you get. You're going to get hit a cost for, and that money goes directly to HUD. Then, even if you put 50% down with an FHA loan, you still have PMI, and you'll have it for 11 years. So if you have pretty good credit, it's more financially smarter in many, many cases to go with a conventional loan than FHA. Now, the flip side of it, as your credit scores go down, so let's say, for example, you have a 740 credit score, your rate might be 5% today on a conventional. Your rate might be 4.75 on an FHA, okay? But if your credit score is 620, your conventional loan might be 6.25, and your FHA loan's 4.875 or 5. So what we have to do is we have to weigh the cost that it costs you for your FHA versus conventional and see where your break-even point. So if your break-even point is like way, 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 way out there, then that might make the decision a little bit easier. But that's basically the reason why it is more prudent in many, many cases to go with a conventional loan if you have some money down, and it basically is predicates on your credit score. That's one of the biggest pieces of the puzzle, and your debt ratio. But
Dan,
and then also, Rick, you can also kind of point out too, because it's also on the realtor side as well.
On the FHA versus conventional.
Correct.
Yeah. In a really hot market, people don't like FHA.
Right. Well, as a realtor, and I think I asked you this on our first time we spoke. Why don't realtors like FHA?
Well, it's probably because there's little things like they go on, on the soffit on the side of the house, some of the paint's peeled, it's got to be fixed. A conventional appraiser never does that. So they start asking for different stuff, and you just, in a hot market, everybody goes, I'm not taking FHA.
Yeah. And what he was trying to explain is FHA appraisals are a lot more strict and stringent than conventional. If you have if you have paint peeling on a window seal, you're going FHA, got to be fixed. Period.
Yeah. Oh yeah.
Window seal paint.
And I hate to do it, but I'm going to have to bounce. So
okay, great having you, buddy. Enjoy your weekend, and I'll see you. I'll talk to you one of these days.
All right, take care, guys. See you.
All right, take care. Bye-bye.
No problem. I got another question for you, Dan.
You betcha. Keep rolling. And I didn't
Another
mean to interrupt.
Common question.
Okay.
For a home appraise. Is it common for a home to appraise at the same price as a
Yeah.
sales contract?
Okay. So here, let me pull the curtain back a little bit, guys. We have to, when we submit your appraisal order. So here's what happens is we get your loan, we get you pre-approved. You go out and find a house. Then you send us the contract. Okay. Most of your loans should be done at that time. Okay. We should already have all your stuff and pre-approved you and everything else. And now the appraisal needs ordered. To order the appraisal, we have to send them the contract. Okay. So the appraiser already knows what the sales price is. Okay. Do I have to say any more? So it is very infrequent that the house doesn't appraise out to what the purchase price is. And it does happen every once in a while. Well, it happened more in the last probably 6 months than I've ever seen in my whole life because everybody's bidding over asking price. But normally in the past, we would have it every blue moon. And is basically the first thing I would do is I'd call the realtor and say, how in the heck did you value this house? And a lot of times they'll send me the comparable homes that were used when they did the analysis of the home to put it on the market. Many times that helps. But so that's why the appraiser has a copy of the contract and knows what the price of the house is. So they'll normally, I hate to say it, they'll try to get that value, but they are they're very regulated and they have to be careful what they do. But that's a fantastic question.
Daryl, yeah, almost all the time, buddy. Almost all the time. All right. I'm not sure what that name is, but our builder was starting our lot next week and told us that we would need to inquire a $13K cost increase due to inflation. We're trying to see if we even qualify anymore, not waste our time. One thing I can tell you, Dan, before you answer that, I've had a couple people call into me this week saying that their builders increased their fees.
And that's why I'll go back to my default. If you're looking to build a house, please, I can't emphasize this anymore. Please get an attorney. Have an attorney review that. I had a huge conversation with a gentleman last evening that was also in process of building a house. And he's built several homes, and this is probably his 5th house that he's ever done. And he said, he hates to say, but those builder contracts are pretty ironclad. They read this way, and this is the normal read. They can take up to 2 years to finish your home. They can push any price increases over to you. As soon as they're done, you have to close. And if none of those 3 happen, they get all your earnest money, see ya, and you're gone. So one thing I would suggest is put down the least amount possible so you have the least amount of skin in the game. So if you do say screw it at some point, you can get out. But try to, at this point, I think what you're going to start seeing is, or have your attorney make an amendment or addendum to that contract, because the builders are starting to get really slow. Okay. And they're going to have a lot of housing come to market. They're starting to freak. Okay. So you might have some leeway here to go in and say, I ain't paying $13,000, because in this case, a $13,000 increase, I would like to know where that's coming from, because lumber prices are basically down half of where they were like 3 months ago. So where that $13,000 increase came in, I don't know, but do they just pull a number out of a hat, or how do they do that? I'm not sure, but I apologize. We're trying to see. Go back to that one, Russ. I'm sorry, even qualify anymore. We would love to see if we could help you with this financing. I don't know if you'd qualify anymore. I don't think $13,000. If you add $13,000 to the price, I mean, you're talking a difference in your payment of $10-12. So I don't think it's, the payment should be not out of whack. But do you still want to continue on? And it looks like you just kind of started. So what's in the future? How many more hits are you going to get? And do you want to put up with that? That's why I'm thinking, a lot of the home builders, they're in for a tough awakening here, because if I'm in the market right now looking for a house, I don't want the risk of, having my house take a year or 2 to be built. I have the inflation risk that you just had. I have interest rate risk on top of all that. So it's a complete unknown. So I'm not a proponent. I'm personally not a proponent of building right now, because it scares the bejesus out of me. But hopefully that answers your question. But all you guys, if you have anything specific, we'd love to talk with you. It's not a hard sale. Call us. You might be pre-approved with somebody else. We'll just ask to look at it. We just want to make sure you're on track, because if you're looking to buy your first home, that's why you're watching this video. We want to make sure you're on track to a right path of homeownership.
Cool. Thank you, Dan. All right. Let me.
You can take any questions if you want.
If you paid the asking price and asked the seller to buy down the rate, well, that affects the tax payment. I think we just missed our guy right on this
No.
one.
No, it won't. It won't. Because what the tax payment is well,
What do
there's
they
a
mean by-
double-edged sword there.
I wonder what Michelle means by the tax payment. Do you know what do you
So
mean? By
yeah,
the
so most states, especially like California and those states, the tax rate on that property is based on the sales price.
Sure.
So, I mean, you're picking hairs, or I don't know the phrase that I'm trying to say on that. Here, let me read it one more time. If you pay the asking price and ask seller to buy down the rate, will that affect your tax payment? Yeah, briefly. I mean, you're talking 10 grand. So in most cases, that might affect your taxes, 1% of that, maybe $10, $100 a year. So I don't think that would be a relevant thing. Here in Illinois, it's not based on the purchase price or anything. They assess your house and then they times that by 500, and that's what they tax us at. It's ridiculous. But in most cases, it's based on the sales price. And Michelle, if you're a realtor or anything, you know that piece of it. I would try to educate my sellers saying, if you want to sell this house now and you want to get basically top dollar, you're going to have to put a little skin in the game to help the buyer buy it at this point, because rates are up and house values are up, and it's putting home affordability out of whack. So everybody's going to have to contribute at this point. But that was a great question. Sorry, I misread it a few times.
No, you're good. All right. So, Robert, I'm an insurance agent for a carrier in which they offer a special rate for agents who they finance. We are 1099 employees, 1 year with the employer, and so they are financing us when others won't. Credit is 717. I'm not sure if that's a question or if
Okay, let me read it real quick. So I'm an insurance agent for a carrier in which they offer a special rate for agents who they finance. We are 1099, so that means he's kind of a self-employed and independent agent, 1 year, and so they are financing us when others won't. Credit is 717. You're right. And when you're a 1099 employee, you're deemed basically as a self-employed. Okay, because what you get if anybody's on here, and let me explain 1099 for you real quick. So most of you probably are out there. You get a paycheck, you get a W-2, you get the stuff, and you see on there that they're taking out FICA and state taxes and your insurance and all this other stuff. When you're 1099, basically, if you make $2,000, you get $2,000, and you have to do everything yourself. So basically, you're like self-employed. So you can actually you can create an LLC or whatever you want to do that. And you can actually file a Schedule C on your tax returns to write off deductions, because you're basically deemed self-employed. So you can write off mileage and depreciation and equipment and phone bills and all this other stuff. So that's why in conventional financing and FHA financing, you need 2 years history. You need 2 years of federal tax returns, full returns, until you can get financing. So their program is, if they can finance you with it, cool. There is a non-QM program that will do that for you, but I'm sure the company that you're going to go through has much better rates than the non-QM program, so you're in good hands. But I would suggest once you file your second years of tax returns, look to maybe refinance, unless the quote you're getting and the loan you're getting is fantastic. Then don't do anything. But that was great to hear that there's insurance companies that will actually help finance you guys. So thank you so much.
Aziz, nice seeing you again, brother. Thank you for watching.
Thanks for joining us, man.
All right. Question. When shopping for a mortgage loan, best rates through a brokerage company, does your credit take multiple hits? I'm sorry, guys.
You answer this one.
Yeah. So guys, when you come and work with us, we're a mortgage broker, right? We only hit your credit one time. We're able to hit your credit one time, and we're able to shop your rate with all 100 lenders that we work with. Even once we move forward in the process, that's it. No other pulls. It's a one-time pull. Obviously, unless it takes 6 months to buy, we might have to repull your credit. But normal times, it's one-time pull.
But check out the video that just posted an hour ago. I go through all of this. I say, here's the best thing to do, and I'll tell you guys what it is about right now. Now, my team now, we are federally chartered. What that means is we can do loans all over the country in Puerto Rico. Okay, why I did what I did. I moved from a lender to actually a bank. I don't like working at banks because you're usually stuck at a desk and you have their rate sheets and their programs. Well, this bank is a little unique. They're actually a huge broker, mortgage broker. Okay. So what this gives me the opportunity to do is I'm now a broker, but I'm federally chartered, which is kind of an oxymoron, meaning I can do mortgages, like I said, all over the country, even Puerto Rico. So at one-stop shop. So coming to us now is like going to kind of Lending Tree, but you're only going to get work with one person. You go to Lending Tree, you put in your information, they sell it to 20 different places. All those places are going to call you and promise you the world and all this other stuff. With us, we do the same thing, but here's how it happens, or here's how it works. You put in one application, we pull your credit one time, we can shop your loan over to about 118 different lenders, okay? And we can even show you, here's all the rates. And I do that on the video that I just posted. That's what we do. So I look at it, my fiduciary responsibility to you guys is to make sure I get you the right program, first off, at the lowest rate, the lowest fee structure. And that's how we do it. And that's basically why I choose to be a broker. I've done this for 33 years. I've only worked at a bank, a lender, one time, and that was for about 2 years. And I just couldn't do it because I couldn't continue to do that and look you in the eye and say, this is the best program for you, when I know the bank right down the street could beat what we're offering you. So that's why my duration there was short. And basically that's what we do. We pull you work with one person. Like in this case, if you call in, you'll work with Nico. He's going to put your loan through the whole process, pull your credit one time, and your contact person will be Nico and his processor. That's it. And we're gonna make sure we shop you all over the country to ensure that you guys get the best scenario of everything. So that's what we do. But that was a great question, because again, if you start shopping around too much, you're gonna have everybody and their mother pulling your credit. And then one thing I highly suggest you do is don't go to like bankrate.com and lendingtree.com and all those other places, because you're going to go insane. You're going to get about 500 calls every day, and everybody's going to promise you the world and just blow smoke up your you-know-what until you finally tell somebody, yeah. So that's it. So great question, and I appreciate you guys being here.
One more for you, Dan, from Brandon again. Are there any lenders that don't take the lowest credit score on a loan app? I have to be added to our house loan, but my credit is lower than my wife's. She's almost an 800 and I'm at a 630.
No. What they do is everybody there's 3 repositories out there. I'll answer this as quick as I can. TransUnion, Equifax, and Experian. So if there's 2 borrowers, there it is. Right now, what they're doing to qualify you, they'll blend the 2 middle scores, okay? So if yours is a 630 and hers is an 800, they'll blend it to a 7, whatever that would be, 7, whatever. But the interest rate is going to be based on your credit score. And I hate to tell you, buddy, that rate's going to stink, because your credit score down in the 630s it doesn't work. So I would try any way possible, if possible, to see, if you can get it qualified under your wife only. And again, we would love to run this scenario past us to see if we can figure out a solution for you. But unfortunately, that's how everybody works. So that's the guidelines. So thank you. Thanks everybody for joining us tonight. And we're going to continue to go until there's no more questions. So please keep asking.
That was the last question for right now.
That's the last question. Sweet. So hopefully tonight you guys learned. I'm trying to make these videos more in depth with you guys. So if you guys are out there, please share the video. Suggest it to friends and family that are possibly looking to buy a house or whatever, because our goal here is to make sure that we answer your questions. That's why we do this format. You're not calling in. There's no skin in the game. We don't have your emails or anything. Just ask questions. That's why we do this, to make sure you're informed and educated everything real estate. Okay. Especially with the financing piece of the puzzle. So I want to just thank everybody for being on here tonight. Nico, got anything to conclude?
No, I would just say, guys, even if after we're not live, leave a comment of what you guys want to hear about or what you guys want to learn from us. We're here for you.
Yep. And we do this every Tuesdays and Thursdays. I don't know how much longer we're going to be doing this, because Nico and I are now being trained by Daryl Eves. If you guys ever heard of Mr. Beast, we now hired his training staff to help us. So we're going to take this to new levels, folks. So thanks for joining us, and God bless. Please check out the video I did just a little bit ago, about an hour ago. I think you'll find that informative. But other than that, God bless. Take care. I will see you guys tomorrow at what do I call it now? The Mortgage Minute with